Ladies and gentlemen, you're probably expecting me to sit here and get really excited and really hyped and go on and on and on about the pros of the cryptocurrency strategic reserve. But I'm not going to do that because I don't think you need to hear that. I think people need to hear a bit of a pullback to reality, a reality check. Okay, yes, there are pros of the crypto strategic reserve, but there also are major cons. And we'll discuss the pros and cons. Today, we'll also discuss the fact that even though we've seen this massive pump on Bitcoin, this 11,000 US dollar pump back into our prior macro support range, yes, that's excellent. That's good to see, but it's not quite enough. The reality is, the levels that formed the major compression on Bitcoin before we saw the major breakdown, which are the Gaussian channel center line right here in green, and also the pi cycle high-low indicator right here in blue. The compression we saw between those two levels that eventually led to a crash to the downside. We're still below them. The levels that defined our breakdown, we are still below. We are still facing major overhead resistance. We are not out of the woods. And this news event was isolated to the cryptocurrency market. All the stuff that happened on the S&P 500, on traditional markets that supported this breakdown, that's not being cleared up yet. There's no resolution in those charts yet. So acting like the whole market is in the clear now is slightly irrational. Yes, we've seen a good step in the right direction. But let's bring you back to reality here. Let's say what people are afraid to say. Here's exactly what you need to be looking at. And yes, I am macro bullish. I'm not macro bearish. I'm not a perma bear. I've been macro bullish since the very end of the bear market, since all the way back here. You can go back on my YouTube channel, go watch the bloody videos from then. When we broke this neckline right here, that's when I declared myself macro bullish. I've been macro bullish ever since, but I'm a realist. I'm a conservative investor, and I'm going to tell you what's real. The price moves on narratives and narratives wear out. So yes, this is massive news for cryptocurrency. It does a lot to legitimize cryptocurrency, that's for sure, and definitely drive interest in the cryptocurrency, but it doesn't guarantee any particular sort of massive mega bull run. That's going to have to happen based on external factors, okay, and based on other narratives like the broader cycle. Before we get into it, if you're going to be in the cryptocurrency market, if you're going to buy and sell cryptocurrency, you need to be on a good exchange. You're trusting exchanges to keep your money safe as you hold coins in the wallets on the exchanges, and you're also paying the money in trading fees every time you make a buy or sell. So it's very important that you get on a good exchange, a reliable exchange, and that's why I like the Bitunix exchange. In its 3.5 years of being around in the cryptocurrency market, it has not once ever been hacked before. That's exceptionally good. And if it is hacked, it has security information available, reserves information available, so that you can potentially get reimbursed on your funds that you may lose in a hypothetical hack, which again has not happened yet. On top of this, it is available to every single one of you watching this YouTube video. It is global, non-KYC. You'll have no problem signing up regardless of where you are in the world with no VPN required. That's insanely good for people in the USA specifically these days. And with my referral link down below, you can get an exclusive 15% trading fee discount just with the Wolves of Crypto referral link. So go ahead and use that link down below and get that 15% trading fee discount attached to your account for life, as well as up to $8,000 in rewards. You can see it on the screen right here where I've highlighted just by signing up with my referral link. So check it out if you're interested. Let's get into the content. The crypto strategic reserve is a mixed bag of pros and cons, just like in my view what the ETF was. I think it's overall probably a good thing. Whether it's good for the health of cryptocurrency, I think is slightly different because it depends what you mean by health. If you're talking about price, if you're talking about liquidity, yes, it's good for the health of cryptocurrency. It's going to lead to more innovation. It's going to lead to more investment. Okay, it's going to lead to more security in the market, right? It's going to lead to probably less volatility in the market. But it doesn't necessarily mean it's good for the fundamentals of cryptocurrency, because when you have governments and massive amounts of institutions getting involved in cryptocurrency, what you see, generally speaking, is more regulation. What you see, generally speaking, is more centralization and more manipulation. That's the simple fact. So it's kind of my conclusion here is the same it was with ETFs. It's good for the price. It's good for liquidity. It's not necessarily good for the fundamentals of cryptocurrency. What I can say is this, though. A major pro of the crypto strategic reserve is it means that unless a future administration overhauls this entire thing, it means there's going to be paused development on central bank digital currencies, and central bank digital currencies were a massive threat to the cryptocurrency market and the accessibility of the cryptocurrency market to the average Joe. So that's a major pro. And for that reason, I do think overall it is a positive thing, but I'm not totally ecstatic about it, right? I think there's threats here for sure. Regardless of the fundamental analysis, I'm not really here to do fundamental analysis. Regardless of the fundamental analysis, we have seen the price move upwards. We've seen the price move upwards about 11,000 US dollars in a very short period of time. But I want to make something very clear, and this is what a lot of people are afraid to tell you about the crypto strategic reserve and the news event itself and the effect of the news event. Just because we've seen the price move upwards in cryptocurrency, guys, it doesn't mean the justification for our drop downwards is completely obsolete now, okay? The drop downwards was not driven entirely by crypto. It was driven by the macroeconomy. It was driven by the traditional markets. And this news event is isolated to the cryptocurrency market. It will not be sustained unless there are further news events and narratives to follow it up. If that was it, if that was the only news, right, if there's nothing else, if there's no new buying, if there's no new big news from the Trump administration, if nothing else happens, we will simmer out and we will continue going downwards, right, as per what was happening before, unless something big changes, either on the macroeconomy or on the narrative perspective. So one single event of news doesn't really mean much. It's an isolated event until proven otherwise. Now, am I bullish? Am I optimistic? Yes, I am. I'm macro bullish in the market. I've never not been macro bullish in the market. I've been macro bullish every day in the cryptocurrency market since the end of the last bear market. Literally since here, when we broke this neckline of resistance at 18,000, I declared I was macro bullish once more, even after buying lower at 17,000. I have not been macro bearish a single day since. Okay, I've been cautious. This region right here, for example, made me skeptical and cautious, but not definitively macro bullish. And I remain, not definitively macro bearish, I should say, and I remain macro bullish now because the cycle is still intact. The only thing I really care about from a macro perspective, the 4-year cycle, the date range trend that predicts we will be seeing a top at the end of this year around October is still intact. I have my invalidation zones for that. One of them is the weekly chart Gaussian channel, and one of them is a breakdown below something like 74,000. Until we do that, I'm still macro bullish, right? So I remain macro bullish. Don't get it distorted. But I will say this. This single news event is not enough for me to jump back on the immediate term bullish bandwagon of jumping into alts and jumping into all these coins and long positions. No, I think that's ridiculous. And I think a lot of people are afraid to say that. I think people are perhaps playing to your emotions right now, getting overly bullish for no reason when they've seen things like this before, right? Narratives are narratives, okay? And unless they continue, there's no new reason for the price to move upwards. So let's be very clear here. Let's trust the charts. The charts do not lie. Here's what you need to know, right? Okay. What led to the breakdown? What led to the breakdown was intense compression. We saw the Bollinger Bands, the compression indicator, the number one textbook 101 compression indicator, being the most compressed it had been since December 2022, since the end of the bear market. This led to a major breakdown. Now, more specifically, what were we compressing against? We were compressing against the Pi cycle support line in blue and also the Gaussian channel center line in green. These are the two levels which define the compression that led to the breakdown. And therefore, until we get back above these two levels, Bitcoin should not be considered overly bullish at all. We are, yes, we are back above macro support. We are back above the yellow line. It's been validated by a short-term rejection before we got back above it. We are back above macro support. That's good to see. This is the macro price range once again in yellow and orange, but we are not back above what actually led to our recent breakdown. We are not in a particularly short-term bullish mood here, that's for sure. Until we get back above that Gaussian channel center line, that Pi cycle line in blue, until we break this I guess, trigger, waiting for momentum to break it in white right here, this trigger line. These things are important, and until we do them, nothing's really changed that massively. All we've done here is get back into the prior macro price range, which we probably shouldn't have bloody left in the first place. So yes, it's an excellent step in the right direction, but it's not enough as of right now, and that's what a lot of people are probably afraid to tell you. Don't get me wrong, it's great that we've seen this bounce. We needed to see it. For example, Ethereum managed to hold on to a major macro support zone. If it didn't do that, it would have been back in 2023 price levels. The total 3 cryptocurrency market cap, the altcoin market, avoided death, avoided complete destruction on the weekly candle close. It was hovering below this white line here, this 2.5 year long support line on the RSI, way too big and way too valid to be a coincidence. It's an absolute blessing that we held that line. That would have led to complete catastrophes across the market. The S&P 500's managed to hold on to this bull market support band on the weekly close. That's good to see. But it's still not where it needs to be. It's still not above its resistance. Neither is Bitcoin. Neither is Ethereum. Even though it's holding to support, it's still not really breaking up, right? These things matter. So before you get too bullish, before you think, oh my God, the market's going to $1 million because Trump said something good, it's not necessarily that simple in the cryptocurrency market. It never is, and it never has been. We still need to trust the charts. The charts still matter, and that's proven by the fact that even during the parabolic surge to the upside we saw upon this news event being released, what did we do? Our last retest of support was right on a valid support zone that we identified yesterday. During the parabolic pump, we saw a valid resistance test of the macro support, and right now we're seeing a new short-term support, a new short-term resistance zone forming. TA matters even when hype is involved, and TA is probably the only thing that matters. Hype is just a distraction. So my final plea to you is this: don't get distracted. Focus on what's important here. Focus on the center line of the Gaussian channel, focus on the pi cycle line, and focus on this white resistance line, and focus on the S&P 500 not dropping further, because if it does, we can see trouble on Bitcoin regardless of what happens to the cryptocurrency market and the narratives involved in it. The last thing I'll mention before I end the video is my VIP group on Telegram. For $125 you can get access to the VIP group for 2 months until May 1st. You can get access to 4 trading plans posted per week, and also a group chat with 160 other VIP members where we discuss the market 24/7. It's been very insightful and useful in the past during periods of high volatility, and with the volatility that came yesterday and today, it's been useful once more. So if you're interested in that, check it out on Telegram. Thank you for watching, guys. Hope you enjoyed, and I'll catch you soon.